Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Paul, dumb question of the day. Who chooses the next meme stock?
I don't know. I think it's all in the online community, the message boards, whoever kind of has the biggest microphone at the moment can kind of talk up a name, and then it seems to build upon itself then.
Biggest microphone of the moment for us right now. Katy Kaminski joins us, Chief Research Strategist, AlphaSimplex. Just terrific technical and trend analysis of what's going on. In honor of you, Katy, I took Log Magnificent 7 back to the pandemic. It's a little bit rolling over, but my word, is that a straight line? When you see persistency like that over 3, 4, 5 years, how do you trade Mag 7?
Well, this is a good question because we've definitely seen a continued focus on those larger stocks, but as you've just been discussing, we are seeing some pivot more recently. So if you look at the Russell, for example, it's been up quite a bit this month. So I think there's some indications in the relative trend signals that there's some sort of pivot going on right now, which is interesting.
Sam Rowe out there writing up as he does for TK. Sam Rowe, the folks that spelled R-O, not R-O-W. And Sam Rowe would tell you that there's a value to studying ATH, all-time highs. What does all-time highs mean for Katy Kaminski?
Well, it's interesting because all-time highs, often one of the challenges with many of the trend signals for this is that when you see markets at all-time highs, trend signals tend to continue to follow those. And it's often those trends that prolong longer than we expect that tend to be the most profitable. So I think as people are starting to liquidate and adjust, if we continue to see strength in this AI theme, that could be a very positive trend because you're going to hold on if you're a trend follower, if things are moving, even if it's all-time highs.
Katy, one of the trends I've been following is the weakness in the U.S. dollar. We just don't see it very often. Is this a trend? Or is this just a short-term trade saying, hey, maybe the U.S. dollar was overvalued, it was a crowded long trade, and now people are just kind of pulling out a little bit?
This is a great question. I have gotten a lot of questions about the dollar recently, and this is important because it is one of the few themes that has been consistent. So we've seen a lot of consistency in the dollar short positioning, and you continue to see a few fundamental themes that support it. So when people are excited about equity markets, that tends to make the dollar weaker. You also have the fact that U.S. rates are higher than other regions. And if we start to cut rates, that is also negative for the dollar, plus sort of disagreement about trade. So we've really seen very little ability to break resistance levels for the dollar. So that means that anytime you think that this trend is changing, that the dollar is going to come back, it hasn't happened.
Well, while Paul's talking to you, I'm doing a bunch of technical studies on the Bloomberg Professional Service. I'm looking at the point and figure chart on BBDXY, and the bottom line is the dollar weakness is in place from February. Do you agree with that, Katy?
100%. And what's interesting is we actually saw the dollar strengthening around the US election, but then there's been this sort of very colossal and strong dollar trade. And it was actually interesting because there seems to be some indication that this is a shift out of the dollar. There's certain data that suggests that maybe market share in other currencies is causing the dollar as well to be weaker. I think this is something that we're going to have to continue to follow. And of course, if you're going to take a vacation, you may not enjoy it so much.
What's your best viable trend right now, besides the Detroit Tigers are going to recover?
So I'd say that the dollar has been the biggest theme for us following recently, but I'm actually quite interested in the recent rotation that we've seen in the equity markets, this sort of pro-domestic, pro-growth, pro-meme stock. That's interesting.
So you're long equities, cut to the chase.
Yes, long equities, but it has been a pivot. So originally we had much longer signals outside the US, and we're seeing a little bit of a shift in sentiment over the last 6 weeks, which has
Right.
been more pro-US. And that's interesting to watch because I definitely didn't expect that 6 weeks ago.
Katy, thanks so much. Really, really appreciate it this morning. Katy Kaminski, AlphaSimplex.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
There are people that talk, and then there are people that do. Out of Harvard, Peter Conti-Brown has established a young, very brief, but nevertheless authoritative career on the power and the independence of our central bank. And critically, he's done it away from, is the Fed going to raise rate? Is the Fed going to lower rate? And much more the regulatory and capital markets operations of the Fed. Professor Conti-Brown of Wharton, thank you so much for joining us. I want to advance the dialogue, Peter Conti-Brown, and just suggest, what is a chance 2 years out, post-Trump, 5 years out, that we have a radically new Fed that Alan Meltzer wouldn't recognize?
What a phenomenal question. And you're focusing on exactly the right question. In the circus of Trump versus Powell, we forget that the central bank has been around for 110 plus years, 112 years. And it is an institution for the medium term. And so your question is the right question. What does it look like in the medium term? Well, now I know Alan Meltzer. I knew him before he passed away. And he didn't recognize the Fed following 2008. And it has continued to change in pretty incredible ways since then. I think the biggest changes that we see in the Fed and are likely to see 5 years from now are two. One is inevitable, and we should welcome or at least be aware of and navigate that inevitability. Right. And the other is very lamentable. The inevitability is, as the world becomes more dynamically complex, because the Fed's mandate is simply macroeconomic stability, it means that its functions will become dynamically complex. The reason we can't just ask ourselves, are we going to nudge 25 bips this way or that way about the Federal Reserve, is because that's not the way that the financial system works. That's not the way the world works. And so asking questions about crypto and stablecoin, about private credit, non-bank finance, about tariffs, about geopolitics, those are questions that central bankers have to think about.
Well, this was addressed by Secretary Bessent this morning with Amory Horton. Professor, this is critical, and you're the guy. You're writing a new history, hopefully shorter than Meltzer's. We're looking forward to that from Norton. But Professor Conti-Brown, just simply, is there mission creep? If you look at, green and climate change, and the Fed's going to solve the world, even taking it back to currency discussions, is there mission creep at the Powell Fed?
I think yes and no. I think the allegations of mission creep are higher in number than the instances of mission creep. But that is not to say that the instances are zero. And so because there are so many factors of potential macroeconomic instability, it would be a dereliction of the Fed's duty to be like those three monkeys: see no evil, speak no evil, hear no evil. We can only nudge interest rates 25 bips one way or another. And so when we see the Fed asking, will there be inflationary consequences from tariff changes? That's not mission creep. That's macroeconomic stability. They would fail at their jobs if they didn't ask those kinds of questions. Similarly, if in the bank regulatory and supervisory functions in Florida, if the Federal Reserve bank supervisors weren't asking banks hard questions about how they were underwriting, say, mortgage loans to banks or to homes exposed to global warming risk changes, that would be a dereliction of duty. Should the Fed, however, say we are no longer going to support through regulatory and supervisory functions oil companies that seek financing? No, that would be mission creep. That's not their job to do. They're not in the world in a world of environmental remediation. And there were instances in the 2010s and 2020s where some central bankers really wanted to get into that mix.
Paul,
I think. Please.
Just because of time, Paul, jump in here this morning with Professor Conti-Brown of Wharton.
Professor, has the has President Trump done damage, meaningful damage, lasting damage to the reputation of the Fed?
I think he has. And it's not the near-term question about whether the Fed's renovations constitute fraud or recklessness. I think that's a red herring. I think that's mostly pretextual. Most Americans in their lives should think about the Federal Reserve not at all. And that's not because they're not sophisticated. It's because they're sophisticated in the things that give their lives meaning. What President Trump has done is made people think about the Federal Reserve constantly, and made them think that the Federal Reserve is just a cabal of incompetents who are mismanaging the economy and costing us all money. That's not true. The Fed is not beyond reproach. Experts should be, and Fed watchers like all of us, we should be criticizing the Fed all the time.
Right.
But by constantly attacking the Fed and making it so the average American is associating the central bank with a negative sense, a sense of instability, it just it pushes that freedom of movement for the Fed into a very dangerous spot.
Peter,
no one has done that more.
I got 20 seconds. When do we get your book out on the political history of the Fed? Hugely anticipated.
Well, but you and my publisher both want to know. I should finish it this year, and it should be out 9 months after that.
Oh, you're killing me.
For about a decade.
You're at Norton. Who do you think you are? Patrick O'Brien? You're not writing about the Napoleonic War. Get that puppy out. We thank Peter Conti-Brown, really one of our best on the Fed history and the Fed independence. Peter Conti-Brown holds court at Wharton.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Joining us now after the bank soiree, Michael Mayo as well. Mike, let me dovetail in technology into banking. You and I remember E.F. Hutton. They didn't keep up on technology. A.G. Edwards, they didn't keep up on technology, and on and on. Which bank is leading in using potential AI and in using present technology?
Well, that's an easy first question, Tom. JP Morgan is the NVIDIA of banking. They're leading with AI. They have it centralized. They say that most of their employees use it every day to save a bit more productivity. They seem strategically and operationally ahead of the pack. They do spend a lot of money on technology. They spent $18 billion this year on technology, and the amount to AI continues to increase. So they think it's real. Right. They're embracing it, and it's it starts more non-customer facing activities, but they're certainly ahead of the game.
Right. Mike Mayo with us, folks. Howard Lutnick moving from 8:15 to 8:45. Okay. Secretary of Commerce here in half an hour. Paul Sweeney.
Hey, Mike, when we came into this second Trump administration, one of the sectors that was really called out as a potential beneficiary was the financial services industry, primarily from a perspective of maybe loosening of some of the restrictions on the big banks. What have we seen? What have we learned so far?
Well, yesterday was the first ever Federal Reserve conference to overhaul regulations, specifically capital rules. And I had the pleasure to present on one of the panels. So I was back in Washington, D.C. at the Federal Reserve Board for the first time in 33 years.
Wow.
And I would say this was remarkable. This was at their headquarters building. In the front row was Chairman Powell and Vice Chairman Bowman, taking notes all day on 5 different panels. By the way, Sam Altman was the keynote speaker, and they're operating with eyes wide open to modernize bank regulation, to keep up with the times, update some stale parts of it, and to create a more level playing field with more transparency and a more holistic approach. I think that.
What are some of the big items, Mike, that you think may be ripe for change?
Well, I think the capital rules. I mean, this is really there's an alphabet soup of acronyms. They overlap. It double counts. It's convoluted. So I think they can make it less complex, less convoluted. In my opening slide yesterday, I said, thank you, regulators, for a great job you did after the global financial crisis, but the rules are too confusing, too constraining, and too costly. And so to the extent that you can make them, less complex, that's important. To the extent that you can make them less constraining, banks have been marginalized. As a percentage of total corporate loans, banks have gone from 60% down to 40%. Loan growth for the last 2 years, adjusted for inflation, has been negative. And you see a lot of the loans go to the shadow banking industry. So those are some of the changes.
Mike Mayo with us here with Wells Fargo. We continue with Mr. Mayo. We welcome all of you on your commute across the nation, at home, in the office, our new distribution, YouTube. Thank you so much for subscribing to Bloomberg Podcast. Paul?
So, Mike, give us a sense of timing here. I know that, the Jamie Dimons of the world would like these rules kind of relaxed yesterday. Realistically, what's the timing here?
Well, this year is about updating the stress test. You saw that last month in terms of a little bit more clarity, a little bit more less harsh, I'd say. And the assumptions are already more harsh than the actual experience during the global financial crisis. We're not talking about going back to 2007 or those sorts of days. So that's this year, I think. Next year, there's international capital rules. That's likely to get modified. And then by the year after that, I think you should start seeing efficiency benefits. And this can be win-win-win. The regulators can win because it should cost less money for the oversight. The banks can win for more profitability, but the customers can win because that profitability is, a bit of that's going to be passed on to them, and they'll have more options.
Mike Mayo, on the banking front, you look at your major overweight view, M&T up in Buffalo, maybe a bit of a caution there. Finally, you get a hockey stick move in Citigroup, a really, really nice move, even after the 10-to-1 reverse split of decades ago. Reaffirm your strong buy on Citigroup.
Well, Tom, as you know, I've been on your show a few times since last year. It was slow going, through parts of last year, the tariff sell-off, but Citigroup remains my dominant number one pick by a mile.
Why?
And I think, well, look, what's underappreciated, they've transitioned from 50 years of a global matrix mismatch structure to 5 lines of business: payments, banking, markets, consumer, and wealth. And each one of those lines of business, has a P&L, they have returns, they have targeted returns, and they have a CEO that's in charge of achieving those targeted returns. Now you say, Jane Fraser, the CEO, does not get a Nobel Prize for doing that, but Citi is now getting operated more like a normal company, and they're only 6 quarters into this new structure. Short term, people are selling the stock inappropriately due to the tariffs. Citi is a tariff beneficiary. They move $5 trillion of money every day around the world. Now, it might be moving to different countries. Also, a lot of the customers around the world need trade financing. They need more trade financing now, foreign exchange. So this really fits right into Citi's, structural positioning while they make the structural change.
Perceive it on price to book using the BQ screen on the Bloomberg. I've got JP Morgan 2.44 price to book. Citigroup's really recovered from a Deutsche Bank disaster, if you will, folks, out to 0.9. So Citigroup's at 0.9. JP Morgan's at 2.44. Mike, in your head, how much of that delta can Citigroup make up?
Well, they can look. Which of my kids do I love more? And those are the 2 stocks that have been on our firm's signature pick list. So JP Morgan's best in class, Citi's worst in class. So I do think though that Citi can re-rate, and trading below book value when it's not a crisis, when they're making these sort of moves, is a little unusual. So I think the stock has 50% upside over the next 2.5 years to $150. And there's no analytical gymnastics with doing that. That's simply as Citi's returns go up from 7% last year, and that's return on tangible equity, to 10 to 11% next year, and then higher after that, mathematically, you get higher stock prices. So it's there's a line of sight for the restructuring. And Tom, you know what's unique for any industry? Any industry, when you say there's a restructuring, okay, what's going to happen to revenues? Citi's revenues were up 8% year over year in the second quarter. So here with Citi, you have a unique story of a restructuring with revenue growth. And that's unique for any company.
Paul, get one more in here with Mr. Mike. He's got to go work out.
Exactly.
Are you doing upper body or lower body today, Mike?
This is a lower body day. Thanks for asking.
Good.
And I'm doing my deadlifts and squats, and I'm still trying to, push forward.
Well, Michael Barr and I are as well. Paul, get one more in here.
Exactly. Hey, Mike, what did you take away from the big banks' earnings last week?
This is an inflection. This is an on-ramp to double-digit EPS growth after having negative year-over-year EPS growth for much of the last year and a half. And we see this double-digit EPS growth for the next 10 quarters through the end of 2027. Right. So, and after that, we'll see.
Mike Mayo, thank you so much with Wells Fargo there in Citigroup, and also on the technology over 270 Park Avenue.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
Now, our interview of the day, without question, on technology earnings. Ivan Feinseth joins us with Tigris. Ivan, cut to the chase. How different is Google from the other AI Mag 7?
Well, they, first of all, lead in search, so they get the leg up on AI-driven search, which they are able to collect a lot of data from, and which optimizes their large language models. That is a key driver of their business. Second, their main source of revenue is advertising, and the more they can leverage AI to show how they can create connections for advertisers to optimize the advertiser's return on their advertising invested dollar, that is a powerful driver as well. So they continue to optimize the data from searches to better connect advertisers with more likely or highly likely customers.
Ivan, I find myself clicking on fewer links because I got Gemini kind of answering my question. How does it impact the business model for Google?
Well, as far as Gemini, they are competing against things like ChatGPT and Perplexity. And I think they stack up well because they have a lot more data being fed from the advertising, the search data. But so if you're looking for specific questions to answers, you're starting to see the Gemini generated answer to the question, but then you're still seeing advertising links to be able to drill further. The most important thing is consumers don't mind advertising. They just don't like advertising that they are not interested in. But the ability to find new products that are being optimized by these search algorithms on Google and, of course, on Instagram are powerful drivers, business drivers.
Playing off Mark Gurman in his definitive work for Bloomberg with Apple, and I went to Google Gemini, just like Paul, and I typed it in, and I got this beautiful essay on Apple and Google agreeing to bring Google AI over to Apple. Is there any veracity? To that?
Well, Apple, certainly they want to enhance the power of Siri. They want to enhance the power of their search, and they have been developing Apple Intelligence to drive it. But they have also been in talks to use Gemini and to use OpenAI's ChatGPT. And really, I think what you want to see is sort of like a meta search or a meta AI search where you're getting data fed from different sources, and then the end AI in Apple, in the case of Apple, to summarize the most concise answer.
So, Ivan, for the tech sector here, for this market to move higher, does the tech sector need to lead this market as it has for, a decade and a half, it seems like?
No, since the beginning of time. The tech sector, whether it was fire, lever, wheel, those were technologies early on. The tech sector, we came out of the caves, we're not going back. We started to eat cooked food, we don't go back to eating raw food, and so on. And so once we enjoy the benefits of tech-driven amenities, then we don't go back to using old tools. So we once we started using the word processor, we didn't go back to the typewriter. So the tech sector drives humanity and the global economy forward. And that will continue since the beginning of time and until the end of time.
On your commute today across this nation, good morning on Sirius XM Channel 121, 99.1 FM at Hager Radio, Washington, good morning, 92.9 FM in Boston, all the way out to Wellfleet.
Wow.
Nailed that.
Okay.
Mermaid head clams from Wellfleet. They're like to die for. Ivan Feinseth with us here as we go to tech earnings this afternoon. Look for those with Carol Masser and team this afternoon. Ivan, what's your single best buy now? Is it Google, or can we go someplace else for the Feinseth single best buy?
Still, it's NVIDIA. NVIDIA is driving the whole AI process. And I know it's up a lot, and it certainly had a big pullback in April. It went all the way down to $86, and now it is recovered, more than doubling. It hits 172. So, and people say, oh, it's up a lot. It is the engine behind the whole AI process. And all we hear is the amount of money every day. It's tens, hundreds of billions of dollars being invested in AI and data centers, and NVIDIA is the primary beneficiary of this. So you need NVIDIA processors, the GPUs. You need then power, you need land, you need water, you need connectivity. So there is a tremendous ecosystem. In fact, President Trump is scheduled to give a keynote speech at an AI summit in Washington, talking about his emphasis on U.S. AI. He wants to be the global industry leader in AI. And we saw last week the $90 billion commitment to energy and data center development in Pennsylvania. By the way, that's not government money. That's companies investing, with Amazon, committing to 20 billion of that, 90 billion.
So what's even great about that, Ivan, is Steve Schwartzman's taken over the Pittsburgh Pirates. That's really what's going on here. As Blackstone, I believe, goes out there. So NVIDIA's $4.08 trillion of market cap with 36,000 employees. Santa Clara, California. Ivan, is it like an extrapolation to $5 trillion market cap, or is it accelerative right now?
Well, it's going to continue to increase in value. Revenue continues to grow at a huge rate. The demand, they cannot keep up with demand. President Trump relaxed the restrictions a couple weeks ago on their ability to sell back into China, which is a huge market. So NVIDIA leads, and by the time any other companies catch up to the Hopper, which is the main one they sell, they have the Blackwell. And then after the Blackwell, when people catch up to the Blackwell, they're going to have the Rubin. So they are 2 steps ahead of being 2 steps ahead of everybody else.
Ivan, you've got a S&P target, I think around 6,700, one of the higher ones on the street. That suggests to me that you're pretty bullish on earnings here. What are you taking away from the earnings season here so far?
It's going to be tech. Tech is driving growth. Tech is growing. And all we're going to see is ongoing huge commitments to capital investment in technology. And it's not only the tech companies. To quote, I believe Tom Siebel, the founder of C3AI, said, every company is going to be an AI company. Every company is going to use AI to improve their business, whether it's pricing optimization, supply chain optimization, target marketing. So AI is going to be integrated just like people are using ChatGPT and Gemini on their phones and more on their computer. This is going to continue to grow. And I recently was at 2 different Walmart distribution centers where they have replaced people who are working on the floor of the warehouse, carrying and lifting things, to people who are overseeing automation, holding tablets and looking at computer monitors to monitor the progress. Where in one of their fulfillment centers, they have taken pick, pack, and ship fulfillment down from 4 hours to 30 minutes. in their frozen warehouse, which is 15 degrees below zero, I could only stay in there for a few minutes with the hat and glove and coat that they gave me. People used to work 8-hour shifts in the frozen warehouse, coming in and out, but now these people are outside monitoring it.
You got to try a studio in New York City. It's like 5 degrees colder than that warehouse. Ivan, we're out of time. We got to leave it there. Thank you for the brief, particularly there on Google this afternoon. And Ivan Feinseth of Tigris on NVIDIA.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We need a distraction. Lisa Mateo, the newspapers. Lisa, what do you have?
That is my job, a distraction. Okay, there is a hot new bag trend from moms this summer. If you're listening up, it's not the bog bag, okay? That was like the hot old one. It was the one that kind of looked like Crocs with the holes in it. Now that's old news. It is Yeti's Camino 35 carry-all tote. Okay, it is all over social media. It runs about $150 to $170, and it can carry up to 300 pounds of weight because moms carry a lot. I'm telling you, you got to put the Stanley Cup in there. They bring it on their boats, the beach, athletic fields, and you can customize it, Tom, with those Labubu plushies.
Wow,
that makes
it's
it
a
even
viral
better.
Tote.
Yes, it is.
And you can hook the Labubu around it.
You can hook the Labubu on it. But Jefferies analysts, they actually point to it, and they're saying it's boosting confidence in Yeti's stock. So that's giving it a little bit of a boost. But this is the hot new thing. You're going to see it all. You're going to see it on the Jersey Shore there. I'm telling you.
Austin,
it's going to be on
Texas,
the beach.
1,300 people.
Okay.
Yeti.
Good morning, Matthew and Yvonne.
Yep.
Thank you so much for Michael McMullen, CFO, Yeti Holdings.
The Yeti water bottles, the technology there is life-changing.
Oh, yeah. The coolers are amazing.
Unbelievable. I'm sitting out on the beach.
Yes.
I can't even hold my Yeti bottle. It's so hot. But then the water's ice cold. It's unbelievable.
It's crazy.
The technology.
But see, now
it
you
beats
can see
the thermos I grew up with.
So this is a tote bag, like
it's
a Trader Joe's bag.
It's
but
really
it's more
big,
durable.
though. It's like, I think, like
Why
18 or
is it
19
superior
inches.
to an LL Bean bag?
Because you can carry more stuff in it. It's waterproof. It's durable. You know, you can drag it around, get it knocked around, and it still survives. So
If you have the LL Bean thermos of the beverage of your choice, and it leaks out into the LL Bean bag, you learn it's not waterproof.
Exactly.
Next.
Oh, by the way, someone on the chat was asking if I can talk about a man tote. I will work on that. Okay, here we go. Moving on. This is people, right? When they travel to Europe in the summer, one thing people always complain about is the lack of air conditioning. So the thing is, heat waves are happening more often. They're more intense. So the hot new topic in European politics is this. It's air conditioning. Wow. So the Wall Street Journal says politicians on the right, they've been sounding off. You have Francis Marine Le Pen propose this major campaign to put it in schools because a lot of schools in France had to close down because it was too hot. In the UK, conservatives urged London's Labour Party to get rid of rules that restrict how air conditioning can be used in new housing. But you have the French authorities who are kind of pushing back on this. They say air conditioning would heat up the streets because of the exhaust. Then you have environmentalists saying it's going to generate more greenhouse gas emissions too on top of it. They say what you need to do is plant more greenery, and that will make things
I
cooler.
actually did a Gemini search on this the other day, and I guess air conditioning implementation is speeding up.
Yeah.
I mean, just because of the heat.
Yeah.
The heat's brutal.
All I know is the tube in London is not air conditioned. And some days, boy, wow.
Yeah.
Especially when you go deep.
Do you have one more you can squeeze in here quick?
I do. Okay, shopping malls, we talked about it, right? A dying breed, a lot of places. But one in Queens is actually thriving. This is Tangram. It's 275,000 square feet indoor shopping center in Flushing. Opened about 3 years ago. But the thing that makes it different, it has boutiques and restaurants. It has, karaoke places up till 6 a.m. it's open. Arcades. Wow. It has the Pop Mart store, which sells those Labubus. It has a cat cafe. So it has all these different things because they're saying it's not just shopping, it's a destination for food and fun. And that's what malls need to start doing, is going to that rather than just the shopping alone.
Lisa Mateo, thank you so much. The newspapers this morning.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.